Welcome to This Explainer. You know, when we look at the financial infrastructure connecting our world, it's really easy to just assume that the systems we rely on today are permanent, fixed. But to understand where global capital is actually moving, we've got to look past those noisy daily headlines. We're going to examine a profound structural transformation happening right now, just beneath the surface of the global economy. It's a long-term architectural shift, and it is already underway. Every generation believes the financial system it inherited is permanent. History suggests otherwise. Just think about that for a second. The gold standard eventually gave way to fiat currencies. Paper money became digital balances on a screen. Bank branches evolved into the apps on our phones. The reality of our economic history is just one of continual evolution. And this isn't driven by some desire for sudden upheaval, but really by the relentless growing demands of economic complexity. Modern financial systems rarely disappear overnight. They're just too massive. They are these vast, intricate webs of trust and capital. So instead of a sudden collapse, they evolve. What we're witnessing today isn't some sudden financial reset. It's actually the construction of an entirely new financial architecture, and it's being built to run right alongside the old one. They evolve, quietly, gradually, piece by piece. So the real question isn't whether we'll wake up one morning with a fundamentally different financial system. The question is whether that new system is already being built around us right now. Today, a growing number of structural changes are happening all at once. But to really recognize them, we first need to understand exactly why the old system is reaching its natural limits. For decades, debt has been our primary engine for economic expansion. Governments borrow, businesses invest, and consumers spend. Under normal conditions, this cycle stimulates growth. But, as we know, every financial model has its limits. As debt starts growing faster than the productive economy that actually supports it, maintaining the whole system becomes incredibly complex. It's like trying to manage endless, deeply archived ledgers. Eventually, debt simply stops creating proportionate growth. If we look at history, societies rarely solve excessive, systemic debt through a single, dramatic, destructive event. More often than not, they adapt gradually. Sometimes that's through inflation, sometimes through financial innovation, or even entirely new monetary frameworks. The objective isn't to destroy the existing system, it's to let it evolve without breaking. So perhaps our greatest challenge today isn't even the sheer amount of debt itself. It's finding an infrastructure capable of supporting an economy that has become fundamentally digital. And that brings us to a really pivotal transition. For most of modern history, trust flowed exclusively through centralized institutions. We're talking about banks, central banks, governments, localized payment networks. They were the arbiters of truth. Picture those traditional stone facades standing as the ultimate gatekeepers. But today, the very nature of how we establish economic trust is shifting beneath our feet. Trust is migrating from institutions directly to the infrastructure itself. This transformation, happening right now, isn't simply technological, it's deeply architectural. By utilizing cryptographic verification and decentralized networks, the entire financial system is slowly becoming programmable. Just as the internet fundamentally transformed how we exchange information, this new financial infrastructure is completely transforming how we exchange value. Let's look at the old flow of trust versus the new. The old way relied entirely on human-coordinated institutions, banks and governments reconciling ledgers. The new flow of trust relies on blockchain networks to verify transactions without any centralized reconciliation. It uses stablecoins to move value globally in just minutes, and tokenized assets that operate continuously 24/7. Now, this doesn't replace every existing institution overnight, but it absolutely provides the new digital rails that future financial activity will inevitably run on. As these new digital rails are laid down, we naturally move to the next logical phase. For centuries, our financial systems depended almost entirely on human coordination. Human bankers processed the payments, human traders executed the orders, and human analysts evaluated the risk. But today, software is increasingly absorbing these functions. It's acting as a globally synchronized, data-driven command center. And the next step goes even further than that. We are entering the era of machine-to-machine commerce. Artificial intelligence is evolving right now from a simple decision support tool into an active, autonomous participant within financial markets. The future financial system won't just be digital. It's going to become partially autonomous. In fact, machine-to-machine transactions could very soon become as ordinary and seamless as human-to-human commerce is today. Think about what these autonomous systems can do. They will negotiate contracts, allocate capital in real time, manage global liquidity, monitor systemic risk across entire networks, and coordinate incredibly complex global transactions. The absolutely crucial point here is that these systems aren't necessarily replacing human judgment. Instead, they dramatically increase the speed, the scale, and the efficiency of global capital flows. They operate at a capacity that manual human coordination simply can't match. As we process the sheer magnitude of this technological shift, it is vital to maintain a historical perspective. Financial history rarely moves through clean, sudden revolutions. It advances through overlapping transitions. Just as gold continued circulating long after paper money appeared, and cash still exists alongside modern digital payments, traditional banking is now seamlessly coexisting with emerging blockchain infrastructure. The evolution is incredibly clear. We went from metal in antiquity to paper in the 17th century, to digital balances in the 20th century, and now to the programmable assets of the 21st century. Each layer builds upon the last. Therefore, rather than asking whether one system will suddenly and violently replace another, we really should be asking a much more analytical question. What pieces of tomorrow's financial architecture are already visible today? If this new system is an overlapping transition, as history suggests, we should be able to look around and identify the building blocks that are already quietly taking root in our economy. And honestly, they are highly visible if you know what to look for. Stablecoins are already settling trillions of dollars. Real-world assets are being tokenized. Artificial intelligence is actively optimizing markets. Digital identity frameworks are being established. Programmable settlements and instant global payments are rapidly becoming the new baseline expectation. Taken individually, each of these might just look like an incremental innovation, but when you take them together, they form the absolute foundation of the next financial era. Throughout history, financial systems have continuously evolved, not because societies actively desired the disruption, but because economic complexity absolutely demanded new infrastructure. The transition from traditional institutions to programmable financial networks is simply the next logical chapter in that long, ongoing evolution. It's the necessary infrastructure for a globally connected digital civilization. The future is rarely announced by a single dramatic event. It emerges quietly. Technology by technology, protocol by protocol, infrastructure by infrastructure. The greatest opportunities, these profound structural shifts, they almost always appear long before the vast majority of the public even recognizes that the world has already begun to change. Which brings us to the core ethos of analyzing these shifts, an approach shared by groups like the Liberatum AI Vault. We don't spend our time predicting collapse, we study transition. Because understanding structural change is exponentially more valuable than trying to predict tomorrow's turbulent headlines. We don't invest in yesterday's economy, we invest in tomorrow's civilization. So as this new architecture is quietly laid beneath our feet, the question isn't what the economy will look like tomorrow. The real question is, are you positioning yourself for the civilization of the next century, or are you still relying on the architecture of the last?